I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. Stock Market Investing for Beginners by Jack Steele is an insightful book that provides an easy-to-understand guide for people who are new to the world of investing. In this book, Steele takes a step-by-step approach to explain the basics of investing in the stock market and how to make informed decisions. One of the things that stand out in this book is Steele's clear and concise writing style. He avoids the use of technical jargon that may be overwhelming for beginners, making it easy for readers to follow along. Additionally, he uses real-life examples and analogies to help readers understand complex concepts. The book starts by providing an introduction to the stock market, including the history, types of stocks, and how the market works. Steele then delves into the importance of setting investment goals and creating a personal investment plan. He emphasizes the need to assess one's financial situation, risk tolerance, and time horizon before making any investment decisions. The author also covers essential investment strategies, such as fundamental analysis and technical analysis, to help readers make informed investment decisions. He explains how to read financial statements, analyze stock charts, and use other tools to identify potential investments. The book also covers the importance of diversification and how to create a well-diversified portfolio. Steele provides guidance on how to select stocks from different sectors and industries to minimize risk and maximize returns. Finally, Steele offers advice on how to manage one's portfolio, including the importance of monitoring investments, making necessary adjustments, and rebalancing the portfolio regularly. Overall, Stock Market Investing for Beginners is an excellent resource for anyone who wants to start investing in the stock market. It provides a comprehensive guide to the basics of investing and offers practical advice on how to make informed investment decisions. If you're a beginner investor looking to get started, this book is definitely worth checking out. The first point of the book is understanding the stock market. In this section, the author provides an introduction to the stock market and its history. The author explains the different types of stocks and how the market works. The book covers topics such as what causes stock prices to go up and down, how supply and demand affect stock prices, and what factors influence the stock market. The author also covers the importance of having a basic understanding of the stock market before making any investment decisions. For instance, knowing the difference between a stock and a bond, and how each type of investment behaves in different market conditions is crucial. Additionally, the author explains the role of stock exchanges, such as the New York Stock Exchange, and how they facilitate the buying and selling of stocks. Overall, this section provides readers with a solid foundation for understanding the stock market, which is essential for making informed investment decisions. The author's writing style is easy to follow, and he avoids using complex jargon, making it easy for beginners to understand. The second point of the book is creating a personal investment plan. The author emphasizes the importance of assessing one's financial situation, risk tolerance, and time horizon before making any investment decisions. This involves identifying personal financial goals, such as saving for retirement or paying for a child's education, and determining how much money one can afford to invest. The author then provides guidance on how to create a personal investment plan that aligns with one's financial goals and risk tolerance. This involves selecting investments that match one's investment objectives and risk tolerance. For instance, if an investor has a low risk tolerance, they may choose to invest in conservative investments like bonds and mutual funds, whereas a high-risk tolerance investor may choose to invest in stocks or growth-oriented investments. The author also emphasizes the importance of diversification in creating a personal investment plan. This involves spreading investments across different asset classes, sectors, and industries to minimize risk and maximize returns. Diversification helps to balance the risk and reward of an investment portfolio and provides a safety net against market fluctuations. Overall, this section provides readers with practical advice on creating a personal investment plan that aligns with their financial goals and risk tolerance. The author's easy-to-understand writing style makes it easy for beginners to follow along and apply the concepts to their own investment strategy. The third point of the book is investment strategies. The author covers essential investment strategies, such as fundamental analysis and technical analysis, to help readers make informed investment decisions. Fundamental analysis involves analyzing a company's financial statements, earnings, growth prospects, and other factors to determine the intrinsic value of a stock. The author provides guidance on how to read financial statements and use financial ratios like price-to-earnings (P/E) ratio, return on equity (ROE), and debt-to-equity ratio (DE) to evaluate a company's financial health. Technical analysis, on the other hand, involves using charts and other technical indicators to predict future stock prices. The author explains how to read stock charts and use technical indicators like moving averages, relative strength index, RSI, and support and resistance levels to identify potential investment opportunities. The author also covers other investment strategies, such as value investing, growth investing, and dividend investing, and explains how to identify companies that align with each investment style. He emphasizes the importance of doing thorough research and analysis before making any investment decisions. Overall, this section provides readers with a comprehensive overview of different investment strategies and techniques for analyzing stocks. The author's clear and concise writing style makes it easy for beginners to understand and apply these concepts to their own investment strategy. The fourth point of the book is risk management. The author emphasizes the importance of managing investment risks to minimize potential losses and maximize returns. He explains that every investment carries a certain degree of risk, and it's essential to understand these risks before investing. The author covers different types of investment risks, such as market risk, interest rate risk, credit risk, and liquidity risk. He explains how each type of risk can affect an investment portfolio and provides guidance on how to manage these risks through diversification, asset allocation, and other risk management techniques. The author also covers the importance of having an exit strategy in place for every investment. This involves setting clear investment goals and identifying the right time to sell an investment. Having an exit strategy helps investors minimize potential losses and capitalize on opportunities in the market. Additionally, the author emphasizes the importance of avoiding emotional investing, such as panic selling during market downturns or buying into a popular stock without proper research. He recommends taking a disciplined and objective approach to investing and sticking to a well-thought-out investment plan. Overall, this section provides readers with valuable insights into managing investment risks and minimizing potential losses. The author's practical advice and clear writing style make it easy for beginners to understand and apply these concepts to their own investment strategy. The fifth and final point of the book is about tracking progress and staying informed. The author explains that tracking the progress of one's investment portfolio and staying informed about market trends and economic news is crucial for making informed investment decisions. The author covers different methods for tracking portfolio performance, such as using spreadsheets, online portfolio trackers, and mobile apps. He emphasizes the importance of regularly reviewing portfolio performance and making adjustments as necessary to stay on track with investment goals. The author also emphasizes the importance of staying informed about market trends and economic news. He recommends following reputable news sources and financial publications to stay up to date with the latest developments in the market. This includes monitoring economic indicators like GDP growth, inflation rates, and interest rates, as well as industry-specific news that may affect specific investments. Finally, the author covers the importance of staying disciplined and avoiding impulsive decisions based on short-term market movements. He emphasizes that investing is a long-term game and that investors should focus on their investment goals and stay committed to their investment plan, even during market downturns. Overall, this section provides readers with practical advice on tracking investment progress and staying informed about market trends and economic news. The author's easy-to-understand writing style makes it easy for beginners to follow along and apply these concepts to their own investment strategy. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.